Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Wednesday, December 7th. This will be a technical analysis breakdown. So if you're someone that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used as a tool to help make good decisions as a trader, this would be a video for you. First off, a couple clarification points. Number one, the price you see over here will be changing, and the candlestick you see right there will be moving around and changing. That is because the market's still open for a small amount of time, but I like to do these videos when the market is still open because sometimes we can capture some really interesting late day price movement. And then second, I'll be using the 30-minute time frame, meaning each one of these candlesticks here represents 30 minutes worth of time. So stock number one here, SMMT. And let me just walk you through the idea, the philosophy of a watch list is to find unique, to find interesting situations and not randomly rush out and buy anything, but to watch it. And this is what I would definitely consider a very unique, very worthwhile situation. Now, as of now, as I speak, there's not really anything you can do with it other than chase the price, right? You could go and try to buy right there, but I mean, that's basically chasing the price, not a good habit to have, because what has already happened is this breakout from earlier on in the day has already happened. But that in and of itself is the interesting, is the unique event, is that good stuff is happening. So yeah, right now at this exact moment, sure, there's not really a setup, but that doesn't mean there can't be setups to watch in the future, hence a watch list. So if you're someone that likes to play pullbacks, maybe you're looking for a pullback of the previous breakout point. Maybe you're someone that likes to play patterns. Maybe you want to see this thing pull back, for example, for a little bit. And then in that situation, you'd have, a bull flag pattern. There's all sorts of things that can happen, but at the core, when you have big volume, big movement like this one's, experiencing, that's what we want. That's what's worth watching and waiting to see if some sort of setup or, development occurs that fits your personal strategy. So yes, SMMT, not necessarily a setup. And this is why I like to look at this thing, continue to beast mode as I talk. But yeah, keep an eye on this one for Wednesday because it's clearly got all sorts of interesting things going on. Next one, COMS, kind of a cruel move here, depending on your strategy. If you're some sort of day trading scalper, then yeah, I could see you having bought that breakout right there, scalped out some profits as it did hang out up around this area of the chart for a little bit. But if you're more of a longer term trader and you're thinking, okay, got the breakout, I want more from that breakout. Well, that 30-minute candle there was very, very nasty and really just, I don't want to say destroy the entire chart because that'd be too overly dramatic. But as far as that breakout was concerned, from the opening 30 minutes, that green candle completely destroyed, completely wiped away. So yeah, from that angle of things, in terms of is this a bad or good looking chart, it just depends on how you played it. Because yeah, if you're some sort of a longer term player that bought that breakout and then we're expecting and wanting more, as of right now, things are not looking so good for you. But taking a step back and looking at things from the bigger picture point of view, the price did still put in higher highs and it's putting in higher lows. And from a big picture trend building perspective, that's what it's all about. You can see as far as the lows are concerned, you have a low, a low, a low, a low, a low. Those are clearly higher than one another. As far as highs, you got a high there, high there, high there, high there. So you're getting higher highs, higher lows. So that is why overall you still do have this general overall uptrend. So like I said, is this a bad or good looking chart for you? Only you can answer that because I don't know what your personal strategy was going in. But yeah, no doubt about it. If you're somebody that bought right there and wanted you chase the price and we're hoping to scale out at higher levels, well then from that angle the chart is looking terrible for you. But from the big picture point of view, like I said, there is still an overall uptrend. Next one, RMED, and this will mean a bit more to those that have watched past videos, but I've talked about it and mapped out these areas of resistance and a couple of very interesting dynamics going on. As I speak right now, this area of resistance has officially been broken. You can see the price is hovering right above there, so that's a good sign, and that's where the first update comes into play. This just being based on a foundational rule in charting, which states when levels of resistance are broken and closed above, you want to see them act as support. I'm going to go ahead and get rid of that level as it's no longer relevant right now. So 550 is what I would call the ideal level of support, meaning for say, Clay, what would make this chart look the absolute best going forward? And that would be if the price can stay above 550. Now, with that being said, if the price drops below it, that does not mean that the entire chart's epically destroyed or anything like that. But yeah, if the price could stay above it, that would certainly be a great sign of power. But from the overarching standpoint, it's all about that purple line there, the 50-period moving average. Keyword there being moving. So as time goes by, that line is going to move itself higher and higher, which is basically like a trend line that's going to draw itself for you. So as long as the price remains above that quote-unquote uptrending trend line, then the overall trend is still fully in the bull's favor. So keep that in mind. And then as far as the next key battleground is concerned, resistance-wise, again, circling back to the levels I talked about previously, it's all about that $6 mark as a next key battleground. And you can see the price is well within striking distance, which brings up the very interesting question, is the price going to be able to push through that level moving forward? We'll see what happens. But like I said at the beginning, that's what a watch list is all about. Finding these unique situations and then observing them to see if they behave in a way that fits your strategy. Next one, AMC, and it just continues to get worse. Explained in yesterday's video how it's a terrible day, not because it was red, but because that purple line had been violated, that pink line had been violated, and then I put that level down there saying, that's definitely going to be a very, very key level. And then you can see today that level has also been violated, which brings up the first update. When levels of support are broken and closed below, they tend to act as resistance. So if there is any sort of attempted bounce in the upwards direction, that 705 mark will be that key area of resistance. But the reason why it was so rough is because now you can see that the chart has entered, or the price, has entered into this area of the chart that is not seen for several weeks. And it's almost a no man's land where, don't get me wrong, I'm not saying now the price is dropping straight down to $5. But like I said, it is just a pretty big space here within the chart, which, there could be just that much more momentum that shows up, because until today, this red line, or was a green line, but that level had been holding very, very strong as support multiple times, including try to hold earlier today. But eventually the price did break down below there, which brings up the big question. So for those people that like to play puts and shorts, puts and just short shares, they're going to be very interested saying, okay, is this now the first kind of leading indicator of a potential move back down to $5? We'll have to see if that happens or not. But if their price, like I said, does try to turn around, then that 705 mark is certainly going to be that first key battleground. Next one, AMD. So not AMC. We're now looking at AMD, and another big rough move on this one today, which violated a very important level. So again, bad day, not because it was red, but because this level here that had been doing such a good job of holding strong at 72.50 as we look back through the history of the chart, ultimately got destroyed today during that opening 30 minutes and then just continued to bleed the rest of the day. Although, I guess, look at the glass as half full, at least this final 30 minutes as I speak right there. Nice little green candle, but still work that needs to be done. So as I've said, with that key principle and levels of support are broken, they tend to act as resistance. So if this final green candle here of the 30 minutes continues to grind higher and higher, 72.50 will be that next key level of resistance to watch headed into Wednesday and beyond. As far as next levels of support are concerned, in fact, did it bounce? No. Oh, wow, I didn't realize that. So it actually dropped down below this level here at $70. But to be fair, it's actually peeking its head back above that level. So I'll leave this a level of support. But $70, definitely a very important level, because that was the bottom of where it went right here. And like AMC, if the price were to drop below $70, you're starting to enter into, like I said, almost a no man's territory in the sense of next level of support. Not really until that former breakup point right down there around 65. Again, I'm not saying that it dropped straight down to 65 or anything like that. I'm just saying, technically speaking, you do have kind of this space within the chart right here. But yeah, rough day today overall for sure. Real quick, I wanted to take a break and personally invite you to get signed up for this free live online class that I'm offering here just in a couple of days. So if you've been enjoying what you've seen, you want to learn more about this tool, how it can and should be used to build consistency as a trader, then definitely get signed up for the free class. If you're watching on YouTube, there's a link down in the description box. If you're watching on my site, there's an area right there on the webpage that you can click to get signed up. So like I said, if you've been enjoying what you've seen, definitely get signed up for the free class. Next one, GOSS. And I mean, this disclaimer applies to everything, but especially in cases like this, if you are not a disciplined trader, if you don't use stop losses or honor stop losses or don't even know what a stop loss is, then these are situations that are definitely not for you. But if you can honor those and be disciplined, then these situations really do provide good, solid risk versus reward, because this thing got absolutely destroyed today. And of course, there are no guarantees, but when stocks get absolutely destroyed, there can be some good, solid, even if it's just a dead cat bounce from a trading standpoint, that can still produce some very dynamic movement. And what I find interesting about this one is the price has started to go sideways. Now, let me really reiterate, and I wish I could say trading was this easy. Just because the price had a huge gap down, just because the price then continued to get smashed and then started to go sideways, does not mean that for sure guaranteed this is the bottom and for sure guaranteed it's going to bounce back up. Now, is it rational? Is it logical to think that, okay, it's starting to go sideways? Maybe this could be some sort of bottom. Yeah, that is definitely a plausible thought to have, but just remember, it's not a guaranteed outcome. So point here being is you have some sideways movement right here with that key level of support being at 215. And then in terms of areas of resistance, the level that really stands out is that 250 mark. Can the price get a break above 250? And if it can, I mean, even if it just goes up there and retests those highs compared to what's being risked, you could be looking at a very favorable risk for reward scenario. But you also have to acknowledge that there isn't a component of trying to catch a knife here, and that's where you got to be very, very careful. But if you can be disciplined and you know how to structure those trade plans, then like I said, from a risk reward standpoint, certainly a very interesting setup. Next one, TLRY, and same general idea that I've used in some of these other ones as far as is this a bad or good looking chart? Well, that's your perspective. Some sort of, quick day trader that was buying here or maybe bought right there. Even, this morning bought right there and their plan was to buy and sell within 7 minutes. Well, then yes, from those angles, the chart looks absolutely terrible. But from the big picture point of view, yeah, it's looking sketchy. Nobody can deny that. But the price is still holding above that pink line there, which even if you have a surface deep understanding of charts, I'm sure you've heard of the 200 period moving average, and that's a key level, and it is hanging above that area. So like I said, things are looking very, very bleak, but are they totally, absolutely destroyed? I'm not willing to go that far because, again, the price is still technically holding above that level, and we'll just call that area right there at $4. With that all being said, if moving forward the price comes down to $4 and then just keeps bleeding and bleeding down through it, at that point, yeah, it's looking like this was just a pump and dump, because that would imply that, because if it gets down to around this area here, around, let's call it the 370-ish area, that would imply that the price exploded and then went right back to where it was. Not exactly the sign of a genuine move. So again, I'm not saying that's what's going to happen, but that is why, in my opinion, that $4 mark is very, very important, because if the price drops below there and continues to bleed, then you're risking potentially going right back to where that big move started. If there is any sort of attempted movements back up, keep an eye on that purple line there, the 50-period moving average, currently valid at, we'll call it 435. Next one, PLTR, and this will mean a bit more to those of you that have watched past videos and remember and have a good memory, because I've talked about this one before and put this green line in a play before. So I'll turn this into a quick plug for that free class. Get signed up, because as you can see here, the power of charts. I put this green line into play a long time ago, and like I said, you can go back to the video archives and look if you don't believe me, because I understand I could be a total stranger too, but the nice thing about YouTube is it's got the video archive, and you'll see that I talked about this level here, and I say all that because, well, first off, it just shows the power of charts, but second, it shows why it's now a very interesting scenario moving forward, because this was a level of support back here, and then you look at where it happened to bounce today. Oh, what a coincidence, right off that green line. The power of charts, it brings a tear to my eye. But as we zoom back in here, it now becomes, okay, more of a rational situation. Not guaranteed, but got the bounce off that level, is now starting to go sideways. So like I said, does that mean that for sure guaranteed this is the bottom? Of course not. But is it plausible to think that, okay, maybe this thing has finally found a bottom and maybe this thing could at least get some sort of bounce back in the upwards direction? Yes, in my mind, that is a plausible potential scenario. So if you like to play these kind of bottom feeding type scenarios, definitely keep an eye on that. But for all the reasons just described, that 690 mark is going to be a very, very important level, because as you just saw, if the price were to go back down to 690 and then, just get crushed down below there, that's putting the price down at levels that have not been seen for a very, very long time. If the price does try to bounce back upwards, then that key first level going to be right up there around $7.15. So let's see what happens with it. Next one here, TSLA Tesla, and one that continues to drift downwards, but like a lot of these other stocks that we've seen, is now starting to go sideways here a little bit. So maybe this is some sort of bottom forming that is, in my mind, more than plausible. But as somebody that does watch Tesla and trades it almost every day, a level that I'm very curious about, and a lot of other people are going to be watching this, so you got to think that there's probably some sort of self-fulfilling prophecy, in regards to this, is that 177.50 mark. Look at all the times the price got around that general area and held strong. So a couple different schools of thought, both would be accurate. One school is going to be saying, okay, if it goes down there, it's bounced from there before, I think it can bounce again. I totally understand that. Another school of thought is going to be, well, what happens if the price goes down there and breaks down through that level? I can see that serving as a point of continuation. Once again, I totally understand where those people are coming from, which is why risk management is so important, because somebody's going to be right, somebody's going to be wrong. So 177.50 is a level at, as a trader that watches this one on a daily basis, that is a level that I'm going to find very, very fascinating headed into Wednesday. Today's Tuesday, right? Yeah. So Wednesday, as far as areas of resistance, all about that pink line there, that 200 period moving average. You can see this morning price got somewhat close to it, and right there the price got rejected by it. So if there is any sort of bigger move in the upwards direction, then definitely keep an eye on that moving average. Next one, TQQQ, ETF that allows you to play the NASDAQ market, meaning if you think that the NASDAQ market as a whole will rise, then this one allows you to make money, because it will also go up just at a much lower price point, which is why it's one of the most popular ETFs out there. But a very rough day today, which would make sense, right? Because the NASDAQ had a very rough day. And now we're sitting at some very, very interesting technical levels. In fact, let me zoom in first so we can get these updates made, which you've heard me say before. So I'm going to get rid of that line as it served its purpose. But the newest level of resistance, based on the fact that it was an area of support headed in today, is going to be this level right there. And you can see that rule actually played out perfectly. So you could throw this into a textbook, price broke below it. And then you can see 3 times afterwards, try to get back above that level, could never do it, and then just get rejected back down. And then the rejected back down is where it now becomes a very, very interesting technical level, because then I want to squeeze things out so you can see the overall importance of this. But this level right here at $20.45, you can see has been tested several times, and to give credit where credit's due, tested there, and once again tested, and it did get a nice little bounce, at least during the last 30 minutes. But if the price falls back below there, like a lot of these other stocks, it's starting to enter into a pretty big space within the chart. Once more, that does not mean that the price is going to drop, just completely collapse straight down, but it does suggest that another, overall major drift in the downwards direction could certainly show up. But to give full credit where it's due, so far so good. The price got down around 2045 and did hold strong. And like I said, that includes the last 30 minutes right there, which did have a nice little green candle. So can the price build upon this green candle moving forward? We'll see what the NASDAQ has in offer. So that wraps up the top 10 list. Again, if you like what you saw here, then I definitely want you to get signed up for the free training. Like I said, it'll be very soon, Thursday, December 8th at 7 p.m. Eastern time. So I hope to see you there. As far as these top 10 videos are concerned, if you enjoy, please do 2 things for me. Hit that like button, leave a simple comment below. Tell me what you traded today. Tell me what you're watching tomorrow. So thanks for hanging out and watching. And again, get signed up for that free class.